sale deed. Won't even get pulled over in they new V. The good life, let's go on a living spree. They say the best.
Hey, welcome back everyone. It is time for another red hot covered call video. Hey, look, today I'm back behind the mic and I am jacked up. Why? Because I think you're going to learn something today. Even you salty dog cover call writers might learn something today, because today we're going to talk about what do you do when a trade goes bad. You know, my man Jerry keeps asking me when you're going to do that video, and it is right here, right now. Now, before we get there, I do want to say this. In my opinion, there are 4 scenarios for which a trade goes bad. And the 4th one is going to be critical. And in fact, you might even put it in the comments that I am whack. But here's the deal. It's all about learning, so we up our game to make it flow like water. Because look, when I started this strategy 2 years ago, I was just like you. I was apprehensive. I was afraid to screw up. And quite frankly, it was a little overwhelming until I talked to my man Jerry, who set me straight. My mentor in life. Jerry helped me with this sometimes confusing, sometimes overwhelming selling premium strategy. To now, I've had over 400 trades and the numbers keep growing, and I love it. Why? Because I have success. And again, I always tell you, it's not about the dollar bills. It's about the little successes that we have. Whether it's $50, $100, $300, or a $1,000 trade, if I plug in a positive trade into my spreadsheet and it turns green, man, that jacks me up to stay motivated, stay inspired, and keep doing the strategy. Hey, look, if you like what we're doing here at the channel, and we have a lot of things we're going to do here at the channel. In fact, this video might be part 1 of a multiple part series. They always talk about the good things that come with covered call and cash secure put selling. But how about the bad things? Because that's where we can find ourselves. And when we find ourselves there, we need that little bit of help, that little bit of financial education to get us through it. So look, if you do like what we're doing here at the channel, I want you to subscribe to the channel. It's right there. If you love this video today, bang that like button. It lets me know you like what I'm doing. Let me give you a quick update on 2 things that are coming. I almost have my Facebook page complete. A lot of people say, John, we would love to keep the conversation going off YouTube, and Facebook is probably one of the best places to do that. So I've created a CTP Dashboard Facebook page where we'll be able to go in and have running dialogue on a lot of the things we love to talk about, whether it be trades or how people use the dashboard. Look, it's all about helping each other. So just so you know, the Facebook page is coming, and that's going to be a great opportunity for us to keep the conversation going. And I want to give you an update on the upgraded CTP Dashboard. Look, I've been working on this, and I'm telling you what, man, I am jacked up because this is going to be the ultimate covered call cash secure put screener, and I'm telling you right now, it is an absolute game changer. The upgraded tab will have exclusive content, and I'm gonna pick 5 stocks from this list, and I'm gonna do a video once a week, every week, talking about why I like them for covered call or cash secure put plays. Look, it's about getting us closer to the end zone. Look, all those secret sauce gurus get you to the 20-yard line, they take your money, and they say good luck. Hey, they might have good information, but at the end of the day, nobody is going to get you closer to that goal line than the CTP Dashboard upgraded version. And I know you're going to love it. Okay, let's go ahead and get to this. I know some of you cats are rolling your eyes saying, look, man, you got to get to the video. So that's where we're going to go. So first of all, understand that in a lot of my videos, I always talk about all the success I'm having. And quite frankly, I do have a lot of success, but I do have bad trades. And look, the way I see it, I'll be trading a stock multiple times. It'll be a bad trade, but I'll do some good things that get me to where I could have a green trade. But to get there, I had to have had my financial education in place. I had to have learned all the things we're about to talk about. That's why it's so important to have your exit strategies in place before you do this strategy. Now, before I show you in my chart how my Whirlpool trade has gone bad, let's talk about what are the 4 things. The 4 things that could go bad are this. You could buy a stock, write a covered call, and the stock rockets way above your strike price. You feel like you're left holding the bag. Now, some would say, John, that's not actually a bad thing. The thing is, when you first start this strategy, that is a bad thing because 1, you don't want to mess up. 2, you're apprehensive because you're fearful that the stock is going to go higher and you're going to have to give away all those profits. So it is a bad trade for a lot of newbie covered call writers because, man, they just can't handle it emotionally when that stock rockets and they lose all that upside. Hey, look, I have written covered calls just recently on Chevron. run where I bought it at 114, I sold the 119 covered call, and the stock has rocketed to 130. Now look, 2 years ago, I would have felt like that's a bad trade. But look, as you start to learn this strategy, you start to realize that those are good trades, and you're looking to do the next great covered call trade. Also, you have the obvious. The stock falls, and the stock really falls. Now, those are really bad situations, and that's where you really have to have your emotions in check. Now, look, there's two different quote-unquote stock falls. Stock falls a little bit down from your purchase price. We can still write covered calls to where the strike price is above our purchase price and still pick up some crumbs. And that's actually a good situation, because when a stock really falls, then we find ourselves in that very bad spot where your purchase price is above your next covered call strike price. So you could actually have your shares taken away if you write a covered call with a strike price below your purchase price. So that's where you really have to have your skills in place. Now, I mentioned 4, and I'm going to mention the 4th one after I show you some charting, so stick around. So let's talk about Whirlpool right here. So if you know my history on Whirlpool, I bought up here, it fell down here, I've done so many trades on Whirlpool, it's unbelievable. My most recent trade on Whirlpool is this. I went ahead when Whirlpool had fallen off, and I've been trading Whirlpool for a while. So in my opinion, I felt like Whirlpool was going to get a little bounce here, probably test the support line again, and I was going to be able to reap some cash secured put premium, pick up those crumbs like I always talk about. Well, guess what? When I wrote that cash secured put 165 right there, Whirlpool did the exact opposite. And you could see Whirlpool is tanking. It gets to as low as 145. And remember, I'm assigned the shares at 165. So again, I've played Whirlpool so many times, I understand that these are cycles that Whirlpool goes through. And in this case, that's almost a 20-point cycle. Well, here's the deal. I have to sit on my hands. The reality is, if I'm going to play this, then I have to sit on my hands, because any covered call I write below the 165 strike and Whirlpool gets on its horse and goes above that, I'm probably going to have to buy the option back, which adds to my cost basis, try to write the next covered call to cover that cost basis add. So I'm really in a bad spot where I have to wait for Whirlpool to recover. If you know me, you know I do not like to wait and sit on my hands. So what I'm looking to do is, as Whirlpool is basing here, and you can see that little bit of support line, what I've finally done is I've decided to write a covered call. Now, in this case, I wrote a covered call for a strike price of 165. Here's the deal. I'm not going to make much money on this trade. What I've done is I've written the covered call. I'm going to collect the dividend. And for me, if I can get out of this bad trade with a little bit of money in my pocket, I'm going to consider that a green trade. Granted, I don't like the trade, but it's going to be green. Getting back to Whirlpool's chart, this is not a stock falling situation. This is a stock really falling situation. So I really had to have my emotions in check. And in this case, I decided to wait as Whirlpool based around that 151, 153 level. And as it poked its head above 158, I wrote the 165 covered call. Didn't pick up much premium, but figure, look, at this point, if I can get out of this trade profitable, I'm going to be happy. Now, in the case of Walmart, this is one of those deals where I probably shouldn't have entered the trade, but I find myself in this trade. Now I need to manage the trade. Now, I've done multiple things here to make this a green trade, but it's not even close to being a green trade here. Let me give you the setup so I could show you what I've done. So if you remember my trade on Walmart, notice Walmart had fallen after earnings. And I'm thinking, look, all the brokerage houses in the world have their people stuck in Walmart. They pay a good dividend. It's a great staple company. So look, it's going to fall off $10 on earnings. They're going to rally it back. They're going to come out with some good news. You know, one of these brokerage houses are going to upgrade them. Well, that didn't happen. And as you can see, Walmart steadily fell. As it's falling, I really feel like I'm stung here, because I really believe Walmart could find itself back in the 190s. So I'm not going to give up on Walmart. But here's the deal. It never came back. And in fact, is now trading a little bit above 83. So I am really holding the bag on Walmart. So what am I going to do here? For me, this is a stock that has really fallen. And look, if I write the next covered call down here and my cost basis is up here, look, I'm going to have to use an exit strategy adding to my cost basis. And I don't want to do that. So here's what I've done recently with Walmart. I've decided to buy some stock over here. I wrote a covered call. I collected a dividend, and And I wrote a cash secured put last week at $85. And I got to sign the shares. Man, this is like a bad trade getting worse. But here's the deal. I don't mind owning Walmart. I believe it's going to go higher. I've reduced my cost basis down to $89. So here's the deal. With Walmart now trading at about 84, Walmart will probably get a little win behind its sales. Look, Walmart is a heavily traded company. So I believe with recent earnings being pretty darn good, I think Wall Street gets behind this and they push it higher. I needed to get to close to 89, maybe 87. Then I can write a 30-day covered call above my purchase price. And if I get out of the trade making a little bit of money, I'm going to feel like this is a win. Now look, before we recap, here's the deal. The last one, the bonus fourth one, is this. And this is the one that might get criticism. You bought a stock, you enter a trade, and immediately you feel like you messed up. Come on, if you're a salty dog covered call writer, you remember that feeling in the very beginning. You may still feel it because I do too. Sometimes you buy that stock, you write that covered call, and you just don't feel right about it. The stock starts to fall. Maybe you get some indicators. Maybe you read an article or hear some news that the stock is going to fall further. Sometimes you just have to pull the ripcord. And I know, again, this is where the criticism is going to come. You got to buy this option back and take the loss. I've done this many times where I buy a stock, I write a covered call, the stock falls, I'm talking to my man Jer, I'm reading the news, and next thing you know, this thing is falling a little bit further than I'd like. And sure enough, buy the option back thinking, okay, I bought the option back. We're going to wait a little bit. I'm down probably 3, 4, 5% on the entire trade. I don't like it. Man, I have the discipline and I pull the ripcord and I take the L. Hey, sometimes you have to do it. Usually I don't do that until the stock gets down to 15%. That is my discipline ripcord pull. Some of you cats never pull the ripcord and in fact would disagree with this strategy. But sometimes you just mess up. Sometimes your eyes get too big for you, but then you find yourself in a bad way. So look, all I can tell you is what I do. And in those situations, hey, I buy the option back, I sell the stock, we move on. We move on. We take the L, we move on. So look, let's go ahead and recap these. Again, this is part one. This is part one because we're going to break these down with more trade examples. We're going to talk a little bit deeper on all these bad trades. So the recap is simple. You enter a trade, the stock rockets. What do? Well, you could do one of two things, right? You could buy back that option, alleviating the obligation, then look to write the next covered call that covers your cost basis add, which is rare, okay? Unless you're playing like a win or a high volatile stock, it's hard to do that. Or you could just let it expire, have your shares taken away. Look, that's a win, right? That's a win. If you've set up a trade that is 3, 4, and 5%, you got your cash on cash money. Take that profit and wait and move on to the next successful trade. Then you have stock falls, stock really falls. Now look, here's the deal. When a stock falls and it falls just a little bit below our purchase price, we still have the opportunity to let it get a couple green days and then we write the next covered call above our strike price. But look, sometimes you just have to sit on your hand. I hate saying that, but sometimes you do. And then when a stock really falls, of course, we always buy back our option and we wait. We wait until the stock gets some momentum, heads higher, and we feel comfortable with our exit strategies to where we can write the next covered call below our purchase price, or you're just going to wait until the stock gets up near your purchase price and then write the next covered call. That's where you really have to have your exit strategies in place. Of course, that's going to be a great video. Look, they've written books on exit strategies, so I'm going to try to really do a good video on using exit strategies. And of course, we can use the cash secured put. I haven't talked too much about how to use a cash secured put in this strategy. But hey, look, you could use a cash secured put when that stock falls down to support. Maybe you write a cash secured put under support, hoping that it goes higher where you can pocket the premium. Or if you end up being assigned the shares, by being assigned the shares, you have reduced your cost basis on the overall trade. So using a cash secured put can also be an option. And we'll talk more about that in part 2. And then finally, if you just feel like you messed up, it's not the worst thing. Okay, we're going to have a positive attitude here and we are going to be disciplined, make the right decision, and hey, we're going to live with that. But look, we have our financial education, we have our confidence, we have our motivation. We're going to look to do the next profitable covered call trade. You really have to have your emotions in check when a stock falls, and really it's the cornerstone of being successful in any stock market investment strategy. Now, hey, look, before I let you go, I offer up all of my spreadsheets to keep all the numbers in front of you on my website, CTP Dashboard. I want you to go to ctpdashboard.com. I want you to click on free spreadsheets. And hey, look, there is the free version of the CTP Dashboard. The upgraded version is coming soon. It is an absolute game changer for researching covered call candidates. Look, I want you to up your game so you have it flow like water. Because the success that comes from that, man, it will change your life. Hey, look, until next time, I hope all your covered calls are profitable.
All I see is signs, all I see